Good morning, everyone. Thank you for being here this morning. I'm Andrea Mendez-Barrutia, and I'm the Director of Community Engagement for the Hispanic Collaborative. We appreciate your time to be here at the November Bank Roadshow meeting. As a reminder, the purpose of the monthly Bank Roadshow series is to support Milwaukee's banking, financial, and entrepreneur support community with in-depth information on the entrepreneurial ecosystem programs and services in order to strengthen our community's existing and budding entrepreneurs. This month's presentation will be on the Wisconsin Economic Development Corporation, also known as the WEDC. Joining us as presenter is our technology investment manager, Joey Frayne. I'll hand it over to Joey and then we'll open it up to some Q&A.
Thank you. So yeah, I want to again send my thanks for everyone for taking the time to come this morning to listen to my presentation. I wish it was in person so I could meet everyone. So hopefully we'll get to do that in the not so distant future. But as you know, my name is Joey Frayne. I'm with the Wisconsin Economic Development Corporation, and I work in our division of entrepreneurship and innovation as a technology investment manager. So what does that mean? Our division, we're really here to help early stage businesses succeed, both high growth technology based businesses as well as Main Street businesses across Wisconsin. In my role, I spend most of my time working with the technology businesses and working on a few of the direct assistance programs that I'll go over. But we also have another half of our team that, and I'll show everyone kind of at the end, that works with partners like the Hispanic Collaborative, other organizations across the state. And those partners work with, the technology startups, but also that's where we're able to engage with, the Main Street entrepreneurs as well. So just going to run through this presentation, probably take, roughly 15, 20 minutes, and then happy to answer any questions that anyone might have. So let's see. So just kind of start with, dreamers are welcome. We always love talking to dreamers. Our thoughts are startups are an engine for job growth. Innovation creates high wage, high skill positions. We want to capitalize on the existing investments and assets in the state of Wisconsin. Want to make sure Wisconsin's diversified economically, right? So we see opportunities across all different kinds of sectors. And I know since we've, in my 6 years doing this, and since WEDC has had some of these early stage programs, it's really been cool to see the diversification of the type of companies that are being started. At the beginning, it was a lot of, biotech or bioscience type companies out of the University of Wisconsin, and now we're seeing stuff across the spectrum. And we want to put Wisconsin on the map in a competitive global environment. Let's see here. All right, so what's our objective? Our objective is to advance Wisconsin's startup and emerging growth businesses by integrating a system of increased deal flow, entrepreneurial development and support networks, and have access to early stage capital and investment incentives for these companies. Kind of how we do that from a strategy standpoint is we look to connect opportunity to different resources, whether that's a resource we may have or another resource out in the ecosystem. Want to close technical and resource gaps, and we want to develop the framework for allowing ideas to turn into viable businesses. Like I said, we're seeing a lot of unique Wisconsin opportunities. This is kind of going to be geared towards, like I said, the technology, but seeing stuff across the spectrum. It was really bioscience heavy in the early days, but now with Epic, we see a lot of health IT, B2B software, B2C software. Unique things happening in manufacturing. So really seeing diversity coming into our portfolio. Like I said, do it through few different ways, direct assistance programs, which I work on day to day, as well as we work with a lot of partners. Here's kind of just some of the partners that we're working with. Just kind of give you an example of, who we work with, different organizations in the state. This isn't all of them, just kind of a snapshot. To see, kind of who we're working with from a partner perspective, and always looking for other partners to see how they might fit into our programs. How our programs are set up, we kind of do it in a few different ways. So we have a few different investment programs, which are in the form of loans, as well as we did just have a pilot program for our first crack at near equity investment, which I don't have in here, but I'll talk about quick. We work with accelerators across the state, work with different seed funds that are in universities or communities in Wisconsin. We have a program we do with the CTC called SBIR Match. So that's to help companies that get some federal grants, get some funding in addition to that, that will allow them to work on the business development aspect of their business, since the federal funding is really going to be geared towards the science aspect of things. Do some things with business planning through the SBDC and other partners. So kind of now I'm just going to kind of hop into our direct assistance programs. So the first program that I'm tasked with managing on a day-to-day basis, and our kind of the first gateway where we meet a lot of these entrepreneurs in the technology world, is the Qualified New Business Venture Program. What is this? Who's it for? It's for innovative Wisconsin startups seeking equity investors. What's the purpose? Investors are going to receive tax credits for investing in qualified startups. So it really, what it is our opportunity to try to incent investment into these companies, de-risk it on the front end a little bit by the investors being able to take a tax credit. Program is a little unique to WEDC, as most of what we do, or how we're set up at WEDC, is we're a public-private partnership. What that means is we're, funded publicly, but our board of directors is going to be made up of both elected officials as well as people from the greater business community. And most of what we do from a programmatic standpoint is going to be developed by program guidelines that we work with our board of directors and our management team to do. So not a ton of what we do is statutory in nature, but this program is a little unique, as it is one of the few statutory programs and the only statutory program that I manage. So as you can see here, it was created by a statute back in 2005. Act 255 was the bill that created the program. Thought process back then is, we're seeing a lot more early stage technology based companies in Wisconsin. We know there's capital in Wisconsin, but how can we, incent the investors to, start putting that capital towards these high risk, high growth companies? So company created this program, and what it is a 25% tax credit for investor giving cash to the company giving the investor equity in Wisconsin based technology companies. Startup and emerging growth companies developing and commercializing new technologies is what the statute is looking for. Available for both angel investors and venture capital funds. Companies are able to issue up to $3 million in credits per company, so they can raise up to $12 million. Really geared towards, like I said, creating high growth, high wage, high skilled jobs in these companies. A few things kind of called out in the statute that are being ineligible, so real estate, insurance, banking, consultant, professional services, lobbying, leisure, hospitality, transportation, wholesale or retail trade, or construction. So really, I think what that means is those, real estate, what that is, or, someone developing real estate, right? But we do have, I'd say, things that kind of delve into these industries, but are really using technology, or, not your standard kind of brick and mortar play into these industries, but really looking at kind of an innovative way to attack, some different things. So we do have some companies that you might say, hey, fit into one of these, but they don't because of the way they're doing things. Like I said, here's the, kind of go over a little more criteria: engage in developing innovative products, processes, and services. And this is kind of what the statute is asking for. Company has to be headquartered in Wisconsin. So we need 51% of the employees in the state. Headcount and payroll has to be a startup or early stage business. We define that by fewer than 100 employees in operation for no more than 10 consecutive years, hasn't raised more than 10 million, and looking for companies that have a high potential for job creation or capital investment in Wisconsin. So application process would be an initial conversation with WEDC staff. A lot of our how we get to these companies is, they might find us just by going to our website, but I'd say, the most likely way we're going to engage with a company is from from an investor, a banker, a lawyer, an accountant, another company that we may have worked with, or, we spend a lot of times, now virtually, but, normally at events across the state, doing what we're doing today, just to kind of get in front of stakeholders in the ecosystem. So, they know how to connect us with companies. After that, they request and we'll submit request the application, we send it out to them. They're going to submit the application with a business plan, pitch deck, executive summary. So just looking for some details on the business so we can make sure it fits the statute. Looking for, financial projections, historical financials. So, pretty similar to any other early stage investor, probably pretty similar to what banks ask for, when they're reviewing stuff. We'll review the application, make a recommendation, and then we get final approval from our secretary/CEO at our weekly management review meeting. Send a contract out to the company. We list them on our website. Companies get certified for 1 year. Don't have to reapply every year, but they will give us an annual report each year for us to recertify them for the following year. Allows us to collect some data that we can, put out to our stakeholders on kind of the measures that we're looking to measure in the program. The request for the credits for the investors are due in March year, and then, like I said, we add in a report certifies them for the next year. Here's the impact in 2018. We did just get our numbers for 2019, but it was after I had this presentation built, so pretty similar. And I could send that out and could be passed on to everyone here. But 334 million were secured by these companies in 2018. Of that 334 million, we issued 16.2 million in credits, certified 54 new companies in 2018. And as you can see, the full-time salary, the average is just over almost $83,000, so well above the Wisconsin mean. So a lot of economic development return on this program, just based off the wages that these companies pay the employees. Here's kind of the breakdown of that investment. So 64.8 million of that was qualifying investment. So what that means is it was equity investment that happened in 2018. How the rest of the makeup is, companies got almost 20 million in grants and then 250 in other private investment. And what that would be is, out of state investment that might not qualify for the credits, or a lot of these companies do debt investment that might turn to equity later on that they'll get credits at that point. More on the impact, you can kind of see, we started, back in 2005 with, certified just under 50 companies. Obviously companies drop in and out of the program over time, but have, almost 250 companies in the portfolio. Amount of credits kind of changed on the year, depending on kind of the funding cycle. The most we've done is just over 18 million, kind of pushing back up that way. We have the ability to do up to 40 million per year, 30 million per year. Haven't done that at this point. You can kind of see employment numbers. So have about 3,500 employees in these companies at this point, and can also see the total investment, right? And that's, went up over time. Like I said, industry-wise, it was really life science heavy early, but now that's down to 13%. You can see pretty diverse in kind of what we see, different types of industries in the program. So yeah, that's the QNBV program. Next program I manage on a day-to-day basis is our technology development loan program. What that is WDC's venture debt program. So looking to work with similar companies to the QNBV program, so kind of the high growth technology-based companies. Not a statutory program, so do have a little more leeway on maybe working with things that might not fit the QNBV statute because maybe their employment base is a little under 50% in Wisconsin, or maybe kind of crossing into one of those disallowed industries that don't work from a QNBV statute standpoint, but would work for this because it still is a high growth company. We target about 5.5 million into this program a year. So do anywhere from 10 to 20 deals to make up that 5.5 million. And we do funding from 100,000 to 750,000. We provide about 20 to 25% of the funding round. And as it says here, we have about over 100 active loans. So actually, I'm going to step back here. So kind of how we get to our amount, we're going to get there in a few ways. So first is going to be stage of business. So for a pre-revenue company, we can do up to 250,000. Companies just going to market, we can do up to 500. And then companies in the growth stage, so that hockey stick has been formed. We've seen revenue grow strongly over, 2 to 3 year period. We grew up to 750. And then, as I said, we're 20 to 25% of the funding round. So what that means is for every dollar we put in, we want to see $4 in match capital. And that match capital is going to come from like I said, angel investors, venture fund investors, potentially banks. Some of the companies we work with do have banking, or, are at the point where they're bankable, and other kind of public entities. So, in Madison, for instance, there's Madison Development Corporation, who has a venture debt fund just like this. In Milwaukee, you have Milwaukee Development Corporation. So we would match, those organizations as well. And our funding, we'll wait to release our funding till we know that match is raised. So if someone comes to us that's looking to raise 500,000, we put in 100,000, and then we look for 400,000 to be matched from those outside sources. Kind of impact here, we did 11 loans in 2018 for 2.6 million. We have just under 100 kind of active loans, 180 million revenue generated from those companies, 80 total companies. So sometimes we do multiple loans, just under 2,500 employees. These companies raised 123 million in funding, and then their annual salary, similar, 71, just over, about $71,500. Our portfolio, like I said, last year or in 2018, 320 businesses assisted, roughly 3,400 jobs, average salary, 82,000 for the QNBV program, 71,000 for the TDL program, total payroll of 191 million, and total new capital generation of 616 million. Back to kind of the loans, kind of from a term standpoint, before I jump into this, is we'll do a 6% interest rate, 2% origination fee on our loans. Really try to term the loan around the cash flow of the business. So I'd say for like a traditional, kind of tech-based startup, we'll maybe do a year of payment deferral, year of interest only, 5 years in 5 years principal and interest. So generally a 7-year term. And then we do a couple things from a collateral de-risking standpoint, as we'll take a GBSA out on the assets of the business. Kind of depending on the type of business that we're working with, that might be beneficial, might not. Obviously a pure software company, they don't have a lot of assets. If we're doing something more kind of manufacturing, there are some assets there. And the other thing we do is we ask for a portion of our loan. So I'd say in most instances, 20% of that loan to be able to be converted into equity. So that's kind of where we get our upside, allow us to take advantage. If these companies do have an exit, we can get some upside based off of that ability to convert to equity. Our investment portfolio is listed out on our website here at this address. So here's just kind of a screenshot of that. If you go to WEDC.org, go to the entrepreneurs and then the innovation investment portfolio, you can see all the companies we work with, whether we do have certified in the QNBV program or the TDL program. I guess this is our team, but one other thing I just want to jump into quick, as I said, is we have a third kind of direct assistance program that we're just doing as a pilot right now. It's called the Wisconsin Investment Pilot Program. And that's our first crack at doing actually a near equity investment. So out of that program, we're doing safe investments. So we're doing up to $50,000 safe investments. Couple kind of qualifying factors for the company is we want it not to be their first round of funding. So for us to put 50,000 in, we want them to at least have 100,000 into the company kind of prior to coming to us to apply. Still looking for the 4-to-1 match. We want to see 200,000 in match to get that $50,000 safe investment. And of that $200,000 match, we want to see at least 50,000 come from a venture fund. So a qualified venture fund, just from a due diligence standpoint. So just rolled that program out at the end of the summer. $500,000 got allocated to it. So looking to hopefully do 10 deals as a safe investment, which, if not familiar with that, that's a simple agreement for future equity, very similar to a convertible note. And what that allows us to do is kind of our first crack at a $50,000 equity investment. It will convert into full equity at the next funding round. Before I answer questions, just here's our team. So Aaron Hagar leads our division as our vice president. Chris Schiffner and myself are both, Chris is the senior technology investment manager. I'm a technology investment manager. Our role is really to work on those 3 direct assistance programs that I briefly talked about: QNBV, technology development loan, and the Wisconsin investment pilot. So we really work with those high growth startups. I do spend a lot of time talking to just startups across all spectrums and really trying to connect them to resources. So definitely, I guess, for lack of better words, spend a lot of time just kind of consulting with startups. Ed Javier and Vincent Rice, they both work kind of on the partner side of our division. So they're really looking to engage with partners, spin up those accelerators, seed funds, things like that, finding ways to work with the partners. So that is what I had for my presentation. Happy to answer any questions that anyone might have.
Thank you, Joey.
Yeah.
Are there any questions?
I do have a question. Hi, Joey. Great presentation. So what would it be the first step for if someone would like to, either get informed or get financial help from you guys?
Yeah, so I'd say I'm happy to have my email address shared out. So if you want to share my email to the group, more than happy. I'd say, the first contact in is, just, if you are working with someone that might be a fit for what we do, just make an introduction. And, I'd say that's, I love talking to entrepreneurs, whether it's someone that's going to work with one of our direct assistance programs, or if not, we can connect them with the WIBICs of the world, or, an SBDC, or, other opportunity that we might have to find someone to assist them, maybe just a mentor or something like that. So I'd say, your first step would be just to make an introduction to me, and then I'll get a time set up to have a call with them, have a Zoom with them, obviously in normal times, spend a lot of time having coffees, lunches, with people. So happy to talk to or meet anyone at any point to try to, lend our, so-called expertise, either with one of our programs or, something else. So.
Okay. Yeah. Thank you.
So yeah, share my email out. There is a contact, I think, us on our website, which is, I think it's just a general form. So probably easiest just to have my email shared out.
I'll be sure to share that.
Yeah.
So I have a question.
Andrea.
Oh, sorry.
Sure.
Thinking about how entrepreneurs of color are underrepresented in tech.
Yeah.
Can you, are there any existing programs or partners that you all are working with to develop the pipeline of Latino and Black,
Yeah. So Vincent just joined our team a few months back. Or I guess he joined our team. We had another division at WDC that he was in. They melded it into our team, and then kind of just through reorganization, we decided to, a couple of those people got moved elsewhere, and then Vincent stayed with us, and his role is really to look at that exactly. So, I'd say QNBV, TDL, the Wisconsin Investment Pilot, there's nothing that doesn't, obviously we want to work with, diversity of entrepreneurs, right? So, we're really looking at kind of business type versus, who the person is, and it shouldn't matter who they are. But, I think just in reality, a lot of those companies aren't started in those communities. So some ways, we're, like I said, Vincent's looking to kind of open up some stuff to engage people in that world. We spend a lot of time, I don't know if you're familiar with the Blueprint in Milwaukee. So, they're really geared towards, diverse entrepreneurs and helping them, start these kind of high-tech, high-growth businesses. They've worked with a lot of people, and I've got to spend a lot of time with them that maybe have something that's more kind of Main Street, and kind of help them, gear those into something that maybe has some more growth opportunities. So we're, definitely ready and available. And I think, that's why Vincent's on our team. And I think WDC as a whole, we're trying to look at many different things. So nothing specifically geared towards that at this point, but I think it's kind of to be determined, and hopefully, as time goes, we'll kind of be able to spin up some more things. So a lot of good ideas, a lot of good internal discussions, but, a lot of work to be done. So, but that being said, the programs we have, we're here to try to help people. So.
Thank you.
And I know there's other even investors, right? I don't know if you're familiar with Dana Guthrie, right, in Milwaukee. She's going to do a fund, and she's geared towards that. So there's a lot of stuff going on. It's really at the beginning, right? So I'm hoping 6 months, a year from now, the progress will be immense that we're making on that front. So.
Let's see. So any other questions? And so the best way to find out about, because the WDC does so much, what is the best way just to hear about, the new programs or?
Yeah, I think I would say go to WDC.org. You can go to our, we have a page for the entrepreneurship and innovation team. And I think we have either one or two kind of different blogs or places you can kind of sign up to get, newsletters from us. So I'd recommend that. And I think if you're the other place, it's a little weird now because everything's virtual, but just like any entrepreneurial event, like one of these 5 faces that you see on the screen, at least one of us is probably going to be at every kind of entrepreneurial event, virtual or in person, as things kind of get back to that. And you'll most likely see, a couple of us there, right? So just come up to booths, we're around, reach out. I mean, that's our role, right? I feel like since we're, WC trying to kind of lead economic development organizations, I feel personally obligated, like any entrepreneur. I think, we need to talk to them and figure out, my goal always is just to leave them, if we can't help them directly, at least leave them with one good piece of advice, connection that can help them move forward, right? And I think, that's our role, right? Working kind of from the top down from the state, is just try to make sure everyone that comes to us at least is left with something that can help them move their business forward. So yeah, we're around. I think our team's pretty active, kind of everywhere, right? So that's what I think. I say the entrepreneurial community is kind of small but growing, and I think it's very welcoming. So I would just recommend just try to get to anything you can that's around entrepreneurship, and you'll find someone that's willing to help.
Sounds good. So any other questions?
Yeah, this is Mike Ward from US Bank. I had a question, Joey, about just you mentioned taking a potential equity position in these firms. Out of the 250, I forgot the exact number you mentioned, how many have actually had an exit, and have any of them had a public markets exit? Yeah,
so a lot. So we've just started taking equity we've been doing it for about 2 years. So we probably have, of our 100+ loans, we probably have warrants, the equity ability in about 20 of them. So since it's only been a couple of years, we haven't had any exits from that standpoint yet. I know I think there's some things maybe coming down the pipeline, so I haven't had any of those yet. But of our greater 250 company or almost 300 company portfolio from the QNBV side of things, at least since I've been there, there's been a decent amount of exits of companies that we didn't have equity in. I don't know if any of them went public. I don't think any of them went public, at least in the last 6 years. But over time, WDC or Wisconsin has had some companies go public. And I think that's just that's a big thing. I spent last week, the Tech Council had their early stage symposium. And I think that's a big thing you hear a lot about our early stage ecosystem. What we're really lacking is exits, right? We need some exits for capital to recycle back into the ecosystem. The investors, the funds that are investing need that capital, so they have now some capital to kind of reinvest. But I think the thing that would be even more important and better is now, these companies have employees that work for them that, own stock in the company. There's an exit, now the next generation of entrepreneurs are going to be formed because, they do all right because they, work for this company that had an exit, and they're going to go out and now 10 people from that company are going to go start their own companies. So that's where you've seen, other ecosystems. Obviously coastal, you see that, but even, Chicago or, some different Midwest ones were mentioned last week, Indianapolis, Ann Arbor, Columbus, places like that. They've had those exits that kind of recycle stuff back into the ecosystem. So we haven't had a direct from our equity positions, but a lot of our companies in the portfolio have had exits.
Okay,
but definitely need more.
That's all for questions. All right, well, we want to thank you, Joey, for presenting this morning. We hope everyone found the WDC information helpful, and the recording of today's meeting will be shared in a follow-up email in case you would like to share that with your colleagues. Please save the date for the December Bank Roadshow meeting on Thursday, December 17th. The featured presentation will be on the Marquette Law and Entrepreneurship Clinic and their free services. And thanks again to everyone for being here. Please stay safe and have a great day. Thank you.
Thank you. Please reach out. Like I said, pass my contact information, and I'm happy to talk with anyone offline at any point. So
I'll be sure to share it.
Yeah, have a good day.
Thank you.